to everybody over there in Australia, Asia Pacific region. Late in the evening for those of you tuning in from Europe, and it's either late afternoon as it is here on the west coast of the United States, or maybe early in the evening if you're on the east coast of North America. My name is David Floyd. I am your host for this evening, or this evening for me, for Eightcap's Trade Zone. This will be the final live webinar that we're doing. I've been the guest analyst here at Eightcap for the last 4 weeks. Greatly appreciate the team's efforts and asking me to come on and do this. Certainly couldn't have picked a better time, at least in terms of market volatility and market action. So we're obviously going to talk about that tonight. The whole point of today's broadcast is really just to follow up on what I had mentioned in the video on Sunday evening, which is kind of giving you a preview of what I was seeing over the next couple of days, and then kind of let's try to set the stage for the rest of the week. But most importantly, I don't want to be sitting here talking to the camera the whole time. I want to be engaging with you. I want to answer your questions. I want to find out, areas that you're looking to improve upon. Maybe there's some individual securities or asset classes that you would like me to look at and give you my 2 cents if that's the case. So the only way this works really well is for me to engage with you, and therefore I want you to type your questions into the questions box. Happy to take as many questions as possible, because that's actually where I get a lot more value out of the presentation. If I'm just sitting here talking to the camera and showing my screen, I'm not sure if that's resonating with you. Is that meeting your needs? I need to hear from you folks. So if we do that, we're going to have a far more productive and far more beneficial webinar. The only thing I'll start off with right here is just to kind of give us a kicking off point is the S&P 500. I don't think there's any doubt that we are very weak. We're even lower than we were closed in New York. Closed in New York around 42.26 if I'm not mistaken. And we're trading at 41.92, so we are weak. Bonds are actually rallying a little bit here, so which is interesting because 10-year notes did not really rally that much during the weakness in the New York session, but they are starting to rally now. So maybe maybe there's a little bit more of a flight to quality. Here's the deal with the S&Ps though. There's no support levels underneath this, at least for until there's a ways down. We broke down this morning from this level right here. I'm just going to draw this line in. As a matter of fact, here's what I'm going to do. This is what we had coming into today's session. I've already moved it because we're off to fry bigger fish now. But coming into today's session, the range was very clearly framed. It was 43.05, 43.70. And given that we had a fairly bullish close yesterday in New York, we broke below 43.05 yesterday. This is now Tuesday, North America, would have been Wednesday for the Asia Pacific region. But the fact that we broke below 43.05 and then came back and closed above it, I actually thought the bulls had a chance. I thought we were going to traverse this range and go all the way back up to 43.70. The best we could do on the opening in New York was a move up towards 43.46, and then we cracked 43.05. I have to admit, I did not catch this break because, again, support is support until proven otherwise. Not that I was looking to buy it at 43.05. I knew that the tape had changed and had become quite weak, but I wasn't just going to blindly buy the break. I want to get some sort of a rebound. And when prices are down here at 42.68, I'm thinking, crap, I'm not going to get my opportunity to get short. And what do prices do? They come all the way back to 43.05, which is now resistance. I got short into this area. I wish I could tell you that I took this whole move, but I didn't. I'm a human being. Sometimes it's always easy in hindsight to say, wow, that's a massive trade there on, over 100 points. Well, it would have been 100 points now. It wasn't quite so easy. There's a lot of volatility along the way on the way down. But again, after the fact, it's easy to look at this and go, holy crap. And I did look at that at the end of the day and go, Jesus, why couldn't I have held in there that whole time? But I got a good chunk of that move, and it made for a fantastic trading day. But right now, I'm kind of like, shoot, I got nothing to lean on here unless we get another rally back up into, let's say, 42.60 or so. But if we rallied up to 42.60, that might be indicative of maybe the tape getting a little bit more bullish. So kind of neutral on the S&Ps for right now. I think I'm bullish on notes because they're starting to perk up with the weaker equity market. So I think that's quite encouraging. So here we go. I got some questions coming in, and that's really what I want to see. I really want to have questions. Hey, Rick, how are you? Let's go here. Well, actually, Rick's talking about the trade. We went long the S&Ps. As I said, I came into the session pretty bullish, and I was looking for a move up towards 43.70. We got long at 43.22. I advised clients to bail out when we really just couldn't get above, we couldn't make much headway, and we started to move lower. Now, Rick is in Australia, if I'm not mistaken. So I believe what his question was is, do you get phone alerts for when we make a change in the trade? And the answer is yes. And Rick, you should have text messaging set up. If you go into the client portal, you can add your cell phone in there, and it will send you a text message so that anytime an update is sent out, you will get a message on your phone. So it sounds as though you probably got stopped out at 43.05, which was what the stop loss was, and didn't get out at 43.32, I think is where we got out. In fact, I know that's where we got 43, took about 9.5 points on the trade, which again, it's not bad, $50 a point, per contract. It's $450 per contract. You're trading 4, 5, even 10 contracts, you're having yourself a good trade right there. So that hopefully that addresses your question. Yeah, that's probably something you're gonna have to talk to your cell phone provider about, Rick. Unfortunately, if you were able to find your cell phone provider in the back end, which it sounds as though you did, and implemented that into the system, once we send them, we can't really troubleshoot them, because then it becomes kind of the domain of the mobile provider to ensure the delivery of that. And again, I'm not trying to pass the buck, but there's not much we can do. Once that message leaves our servers, it's then kind of within the domain of the network to get it to you. So I do apologize, but I would check in with your mobile carrier just to make absolutely sure. But bottom line is, yes, you can get a text message to your phone. You're saying your cell phone provider is not listed in the list of in the back end there that you can choose? Yeah. Ooh. What I would do then is I would ask your cell phone provider, you need to be able to receive a text message in an email format. So you just can't put in your mobile number. It has to be your mobile number, at, whatever your mobile provider is down in Australia. I don't know what the mobile providers are, but it has to be in the form of an email. So, for instance, here it would be my phone number at verizon.net, or whatever the case may be. So you'll have to ask them how you can do that. And then once they give you that quote unquote email to text format, then you can put it into your profile, and it should work just fine. So that's where we are on the S&Ps. Again, they look pretty weak right here. 10-year notes are moving. Unfortunately, the other markets that I look at, and again, I keep a very narrow focus, S&P 500, 10-year notes, and a handful of currency pairs. Currency markets are getting quiet again. The Australian dollar and New Zealand dollar had a really nice run over the last 4 days. But given the weakness in the equity markets today, they've come back. So I'm kind of neutral on those. I'll show you both of those right now. The New Zealand dollar was actually the most robust of the movers. The game plan was really simple. Again, I primarily trade off my support and resistance levels, which you can see drawn on the charts here. I told clients anything above 67.02 is bullish. That was the lower red band. And obviously I was looking for a move all the way to 68.73. Now, maybe we get there, maybe we don't. But with the weak equity markets and the dollar looking a little bit firmer, I would advise clients to probably, book partial profits, put your stops in at break even or whatever you're comfortable with. But again, we got all the way up to just above 68. So we almost had about a 100 pip move on the Kiwi dollar. So that was pretty solid, very solid as a matter of fact. Aussie dollar not quite as robust. Actually, I take that back. Aussie dollar was robust. I take that back. Down into the 71.11 area from last week, and we traversed all the way up. Show this very, very clearly for you. So 71.04 was the initial break above the lower support level or the lower resistance, the green band for the Australian dollar. The logic, as I've mentioned on this webinar many times, once we break above the lower area of a band, we expect prices to traverse to the other side of the band, and we did, all the way up to 71.91. And in fact, we got all the way to the orange band up to 72.76. So a really solid trade overall in the Aussie dollar. If you're still in it, make sure you tighten your stops, maybe book some partial profits. Again, it could keep running. It's just when the equity markets get pretty weak, sometimes the Aussie dollar and Kiwi dollar tend to move along with that, but that hasn't happened yet. So maybe we're in a slightly different dynamic here. The euro, I was keen on the euro today, but unfortunately it broke down. I was really wanting to get long the euro, right above. I thought we had a chance of getting above 113.70, 113.77, right in there, which would have been a break above the upper green band and a break above the upper orange band. So that would have set us in a really good position to traverse all the way to 115.61. We just never did, and prices have broken down. So I'm neutral on the euro now at best. If anything, it looks as though, given that we closed below 112.14, 113.14, we could go all the way back to 111.97, which was a long for us back in early February when we broke above 111.87. That was a great long for those of you that were on our service at this time, and I've even talked about that on the first webinar and then the first preview video. So we could go all the way back to there, for all I know. But for right now, the idea of being long the euro, it's been kind of tossed out the window. Tesla. I know there's probably some people in here that trade Tesla. Again, I'm not surprised by any of this. I mean, I just never quite understood it. I guess they make great cars and blah, blah, blah. But, the fact that the bulls couldn't take out these levels since the beginning of the year after a move lower, very corrective action, couldn't get it back above 915, couldn't get back above 955, back below 865. Well, this is not out of the question. 555 probably won't happen tomorrow, but it wouldn't surprise me if we went all the way back to 555. ARC, what can you say? What a train wreck. I've been in this industry almost 30 years. Every market cycle has the same thing. That's the new thing. This is going to the moon. No, it's not. This is a bunch of nonsense, stocks that don't make any money and blah, blah, blah. And you can see the result. We peaked out around 160. Now we're at 60 bucks. How you doing? Once we broke below 89 in early part of the year, which I called because it was pretty obvious. This red line, it had been there for a while. Once we broke that, it was no looking back. Now there's nothing below us for the most part. There's these minor levels down here at 61.47, but we closed below there too. So again, there's no reason to buy ARC in here. There's no quote unquote value. We trade price action. We trade price action based on where large amounts of trades have taken place, and we use those as our inflection points to establish and or exit our trades. There's no reason to do anything in ARC right now, at least from a buying perspective. Could you go short it? Yeah, I suppose if you've got a long-term view, but from a trading perspective, one of these days you're going to wake up and the thing's going to rip higher for the day, because that's just the nature of markets. They get a little too extended and then they rip higher. I would use rallies though as an opportunity to get short. unless something dramatically changes about the underlying portfolio at ARC. Again, got nothing against the product, but it's nothing I would have touched with the 10-foot pole, nor will it be. It's just not on my radar, and the price actions prove that out. So that's what we got. Let's go back to some questions. Rick had a question, but it was really mainly a client services question. And Rick, have you got the levels loaded up yet on TradingView? I don't know if you, I don't usually look at the day-to-day stuff. That's my assistant Scott. He usually does all that stuff. But I know you were talking about getting the levels for TradingView. Have you loaded those up yet? You can't get them with TradingView? Oh, because you're using TradingView through Eightcap? That's interesting. It shouldn't matter. Oh, you're using MT5. Gotcha. Well, if you use TradingView, that's where they are. So I know Eightcap is going to integrate in TradingView, but there's nothing precluding anybody from using TradingView outside the Eightcap ecosystem. It's a standalone platform, so you don't need to have Eightcap, as part of that equation, so to speak. Rick is asking a question. He goes, "What do you mean about the tape?" The tape is it's a euphemism for how the market's trading. It basically is a throwback to the way back in the old days where you actually had the ticker tape. And back in the old days, a trader would literally watch the ticker tape moving, whether it be the paper one, or then in the 80s and 90s, we had the electronic ticker tapes. They would watch that to gauge what the markets are doing, the pace of the action, noticing volume trends. Wow, IBM's trading a lot today and it keeps moving higher. That's called reading the tape. So whenever I say how the tape is, I'm talking about how I'm interpreting what the market's doing. The tape is weak, the tape is strong, the tape is flat, the tape is weak, but there's a lot of buyers absorbing the sellers, or the tape is strong, but the buyers are, but the sellers are are absorbing the buyers. So it's a catch-all phrase, but it's very, very important. You have to, as a trader, you can't be completely black and white as a trader. There's such a level of feel and experience that come into this. And I've said that many times on these webinars. You just can't blindly buy and sell these levels. Now, let's go back to the S&P example. Could you have just quote unquote blindly bought the 43 or sold the 43.05 this morning? Well, yes, you could have, because we know that once prices break below support, that becomes a resistance level. And we know that quote unquote, the tape is weak. I mean, just look at the chart. Weak. The rallies are tepid at best. We look at what advanced declines are doing. We look at, basically, you're just studying the price action going, wow, every little rally is met with more selling. Therefore, the tape was weak as we rallied into 43.05. It's worth getting short there, because what's your stop loss? 3, 4, maybe 5 S&P points? Whoopee-doo. If we break back above and go to 43.10 and the tape looks pretty strong, you're like, okay, that particular one didn't work out, I'll reevaluate. But we never even ticked above 43.05. I got short at 43.0350, and we traded up to, what was the high on this bar here? High on this bar was 43.0550. That's just noise. So that's what I mean by the tape, Rick. It's all about, you also see the phrase tape reading, and it's one of those things you learn to do it through experience and through years of looking at the charts, and or months if you're an aspiring trader. So that's what I mean. And you have to have the ability to read your tape in order to get the most out of the analysis that you're doing. So hopefully that makes sense. Rick's the one-man show here with the questions, which is totally cool, but does anybody else have any questions? And again, I'm talking at you guys. Obviously, Rick and I are having a conversation, but I don't know if I'm really hitting upon any of the things that are important for you folks. I mean, Eightcap set up these webinars for the benefit of their clients. I showed up to give the benefit to their clients and, you know, to provide my insights. So I'm assuming you're here to get something out of this. So let's make it a two-way dialogue. Well, I pretty much shared everything I have with you. I mean, again, I've given you my lay of the land, so to speak. And as I said, you know, 10-year notes look a little bit perky, which is good. S&Ps are weak. I don't really have any levels to work with, so kind of in neutral land right now. And as I noted in FX, we're kind of in a holding pattern there as well. So unless anybody else has got questions, you know, we're gonna call this last installment of the webinar series. We're gonna call it off a little short at about 21 minutes in. So I do greatly appreciate everybody attending these over the last 4 weeks, and hopefully you've got some value out of them, as well as got some values out of the weekly forecast that the weekly video forecast that has been posted on Sunday. So again, thank you very much for your time. My name is David Floyd with Aspen Trading Group. If you're looking to either have the support and resistance levels that I've shown you on the charts, you can do that. They're available through aspentrading.com. Or if you're looking to get some more insight on what I'm doing as a trader each day and get my thoughts on what I'm trading, how I'm trading it, and when I'm trading it, you can also get some information on the website on that information as well. So again, thank you very much. Greatly appreciate it. And Rick, me as well. I appreciate your questions, Rick. Indicates to me that you're serious about trying to figure this out. It's an amazing profession. Requires a lot of time and commitment. Just so you know, I know you know that, but a lot of people have a very weird sense of what trading's all about. It requires a tremendous amount of dedication, but it's like nothing else. So Rick, I look forward to it as well. So take care, everybody. Have a great day in Asia, the morning that is, and for those of you in Europe, go to bed, get some sleep, and have a nice evening for those here in North America. Take care.